Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's been quite a week, and that's to say the very least about this market, but we've got some very, very important elements and points we have to look at. What you're looking at on the screen right now is a long-term chart of the Dow. It's going all the way back right here to the first quarter of 2009. That's when the market bottomed out, and you can see we've had the move up. We've come right back down, touched the line, up, touched the line. We're right here, touching the line again. The question is this going to hold? And I don't think so. I think it's going to break through and go much lower. How much lower can the Dow go? Realistically, it depends on perception and how people panic, not just here in the US, but also globally. Let's take a look at our Fibonacci tool. So if we go from the very, very high and go to the very, very low, the potential is we could see the Dow getting down to certainly the 15.5 level, which is a 23.6% correction. The 38.2 correction is 13.7, and then a 50% correction, which is possibly in the cards, takes us back to 12.4. Now that also, if we scope this across here, takes us back to an area where the market did find support before. So I think there's a good chance the 12.4 is a realistic number. Now that's about 6,000 points lower than we are right now. So that's a big, big change. And remember, when the market started going down like it did in 2007, 2008, it just goes down. It's really pretty unrelenting. And remember, they slide faster than they glide. That's the old trading rule. They go down faster than they go up. So we could see realistically, with the elections coming up here in the US, presidential elections, you could see this market really uncertainty as things get thrown back and forth politically and causing even greater uncertainty for everybody. So that's the levels I would be looking at. We do have a trade triangle negative. All of our trade triangles are negative now on the Dow. They have been for quite some time. Let me just clear the screen off for a second. This is just the last 6 months. You can see we may have broken the line. I'm not quite sure. We'll see after the close today. But generally speaking, if we put our monthlies in, you can see we've been short this market for quite some time. And I think that's the key thing. We've been since June 30th. That's almost 2 months. We've been short this market. And I think that's the key thing to remember. The trade triangles are very, very powerful. Do not ignore them. And if you do, you ignore them at your own peril. So you can see we've been short this market. And if we put our weeklies in for timing, you can see that's our last weekly signal was on 7/27, almost a month ago. And that was from quite a bit higher than we are right now, about 900 points higher. So let's move on to our next market. Pretty much the same picture in the S&P 500. Let's scope this out to a maximum and see where our trend line kicks in. Maybe a little bit different on this market because the Dow was the one that really was the weakest of all three of the indices. And I think we can say 1800 could be a stop out point, could be a stop point support area for this. So it's a very different picture from the Dow. And remember, the Dow is only 30 stocks. This is a much bigger basket of stocks. So let's take a look at our triangles, and they're basically all negative. So you should be either out of the market or short this market at the moment. This is the NASDAQ, and this is a little bit more of a friendly picture, but you can see here again, it's had a nice move up. It was a little slow getting up there, but generally speaking, it did reach up there. But here's the trend line. Here's the trend line you should be looking at. And so 4,000, which is another 800 points where we are right now, could be good support for the NASDAQ. So I would say, generally speaking, the trend is your friend, and the trend right now is negative. We see we hit this level yesterday on the market at 4,888. So it's got 86 points in it right now. Not a lot, but it's the start, and that's the important thing. You can see these markets are generally not positive. So let's see how things play out for the rest of the week. If the market closes on its lows, you want to be short this market, and probably some stocks that are very weak on the 52-week lows, and maybe buy a 52-week high one to offset that trade. Looking at the euro-dollar, you may remember we've been positive on the euro-dollar, making its base. We've talked about this base that it's been building. It's clear if you just look at this chart that we've got our weeklies positive and the dailies. We use the weeklies for trend. Remember that, weekly for trend and the daily for timing. And you can see we talked about the sort of nice head and shoulders base and the fact that it's really broken out again and it's going to head higher. So I would think probably from the, let's say the 108.5 to here, I think you could be looking at the 116 and 116.50 level on the euro. So let's see how that plays out. This is gold, spot gold. We talked about this base. We actually thought it was going to continue going down, but the triangles kept us safe. And this is the point I want to make, is the fact that if you look at these triangles, that's the weekly, last weekly here at 1,180. The next one kicked in at 1,126, almost $54 lower. And that's the important thing. That's the big trends. That's what you see, the trend. So you use the weekly for trend and the daily for timing. Now we put the dailies in here, and you can see the dailies would have kicked in at the same time right here as you had one just beforehand. You would have taken a small loss on that, but you'd still be long from 1,126, and we're currently trading at 11.57. So you have about $31 profit in this market right now. Again, stay with the trends. How far this can go, it depends how much uncertainty and panic hits the market. But generally speaking, I think the trend is clearly up, and we're going to see this market perform better in the weeks to come. Last market, crude oil, continues to be erosion. This market has had not any kind of upward momentum at all. The one thing that is happening, we talked about this before, and that is let's say below chart studies, we'll just take this volume off. You can see it very heavily oversold. That's the relative strength index. And if we look at the other market, conversions, divergence, just totally flat. That's just insane. But the reality is the trend is clearly down. You can see all of our trade triangles. And this is the good thing about the trade triangles. They keep you in the market. You don't guess them. You don't figure out. Just stay disciplined and follow the triangles. Here's a 42.69. So there's $1,500 profit just in the last few days per contract. And it's very, very simple, easy to do. We've made a ton of money in this move down here in crude oil using our trade trials. Hey, I'm Adam Hewison. Be disciplined. Please be disciplined when you trade. Have a great weekend, everyone. I'll be back on Monday.